All right, Mr. Green here, just waiting for the other social media outlets to boot up. If you're live with us right now, you could be on TikTok, Instagram. I'm recording this for YouTube today, so hopefully when y'all see this, it's just going to be a lesson, not live trading. I was asked by a lot of students, as you guys filter in, I was asked by a lot of students to kind of go over some basic concepts with chart analysis, how professionals and trade, different towards, your average Joe retail traders, investors. All right, we're fully up. So my name is Mr. Green. I am one of the Phantoms at TradePhantoms. Okay, TradePhantoms.com is our website and our community, our crew. So really just a basic concept structure class here today to talk about, what's the difference between a professional and a retail trader, an average Joe, which 97% of our population makes up people who don't know what they're doing in the market, right? Trading and investing is not easy, okay? It takes time, it takes effort, it takes skill. So now, you start, you get confused. I get these people all the time. Well, who, Mr. Green, who should I listen to? Who should I listen to? You shouldn't listen to anybody. You should listen to yourself. Now, there's the trick, right? Now, there's the catch. How do you listen to yourself if you don't know what you're doing? Well, you need training, and the main training and the main skill set that goes with this is learning how to read a chart. So there's an old saying in the industry, the charts don't lie. Who does lie? Shoot, everybody, right? I used to have a boss that would tell me, he'd say, Anthony, what do people do when they move their lips? I was like, I don't know, talk. He's like, no, they lie. So a little cynical, but I get it, especially in this business. It's a crazy business. So, really what we do at Phantoms is we teach people how to do this. We're not giving people direct advice. You don't want direct advice, If you happen to fall on this channel right now and you're watching me right now, it means that you're trying to learn how to do this. So just kind of pay attention as I start to go through some stuff here, okay? So right now, right in front of you is the granddaddy of them all, the S&P 500, okay? That is the benchmark for globally, not even just the United States, globally, the exchange, okay, for equities and stocks. S&P 500 is, the 500 best stocks. They make an index of them, they boot them out when they don't perform, okay, and they choose which ones go in. There's one other benchmark in the industry too. I just want to do this real quick, is the dollar index. So the two biggest benchmarks that really can give you a telltale on a lot of movement, price movement in any stock or options or futures or cryptocurrencies is the dollar index, okay, and the S&P 500. We're going to stick with the S&P 500 today. All right. So these things in front of you, some of you have already seen probably some of these, some of you haven't. If you've seen some of this stuff before, bear with me. I'm going to get to a little bit more advanced stuff, but I have to start off slow. Candlesticks are what you're looking at right now. They represent two things: price movement over time duration. That's it, and that's all you need to know. Now the question is, well, what do you need to know about them? Well, these candles are going to move based off of buying and selling, okay? And it's going to be a mass load of buying and selling, meaning the people that are buying the most and selling the most are the ones who are going to affect the market, right? This is basic supply and demand, also called institutional order flow. Now, if it's moved from the masses, what that means right there is me, you, average Joe, the average retail trader and investor at their computer, even if they know what they're doing, we don't have an effect on this. We're peasants in this game of life, okay? I don't care if you're trading with $1 million or $5 million or 10, that's not a lot of money. We're talking billions and trillions of dollars. So who controls the market? Banks and institutions control the market. They control the market by large buying and large selling orders. They are gonna push price in the direction that they want it to go. Some call this market manipulation. It's not, it's just how it works. So what do we have to do? Where do we come into play, right? Like a minnow. That's what we are. We want to do our best to buy and to sell when they're doing. Now, there's no guarantee. There's no bat phone to Goldman Sachs or UBS. I wish I had it. I don't. Okay? All we can do is, with a higher degree of accuracy, pick our tops and bottoms and get in and get out at the best of our ability, while using proper risk management, okay? Mr. Blue, one of the other Phantoms, says it the best. He goes, He goes, you're not traders, you're risk managers. And he's right. He's right, okay? So on these charts, okay, there are patterns. There are patterns that represent imbalances of demand and represent imbalances of supply, all right? And I'll just kind of go through some of them as you go through here, right? Now, I'm on a daily chart. So for some of you newbies, right, all this means is each one of these candles right here represents 1 day of price movement. So as you can see, after today, the last candle on the chart was bullish. Today was a bullish, meaning upward day in the market, all right? Yesterday, obviously because of inflation that dropped, was a bearish day, okay? And it's kind of starting to correct itself a little bit. But if you look at it right here, it did actually hit a level and an imbalance of demand. So basically what we're looking at here is what happens is you start talking about liquidity. So when banks and institutions buy, okay, not all their orders necessarily get filled. Meaning, I'm just going to use this example right here, this level right here. I just drew a line from the top to the bottom, okay, around 49.77, right? Basically what happened when institutions bought here, okay, and these candlesticks have terms, rally, base, rally, okay, rally, base, rally, but I don't want you to get hung up on that yet, all right? When institutions try to buy, there's about a 99.9% chance that all their orders don't get filled at once. And you ask, why is that, Mr. Green? Because they buy too much and there's not an unlimited amount of liquidity in the market. Now, me, you, and average Joe, we don't run into that. We buy 100 shares, 1,000 shares, whatever. They're buying hundreds of thousands of shares or contracts, right? Or puts or calls, whatever they're doing, all right? Or units and FX. It doesn't matter. Supply and demand is the standard. For trading and investing. Anybody that's a pro that I know, and I've been doing this for over 10 years, trading and teaching, okay, and coaching. Anybody I know that can consistently make a living off this, that trades professionally, always follows institutional order flow first. Then do they add extra things on as odds enhancers, like maybe some technicals, you know, some indicators, maybe some fundamentals? Sure. But price action trading, also called institutional order flow, is the cream of the crop. It's where you got to start from, because at the end of the day, basic economics is always going to take its course. So when they try to buy here, just in this level, and this is an example of a level working, the levels aren't always going to work, and we're going to get to that too, all right? When you see here, when all their orders didn't necessarily get filled, say half their orders got filled right here, it's still going to drive price up because it's still a lot of orders, but they're left with something called unfilled orders here and a level of imbalance. And what they do, they meaning they, the banks, the hedge funds, Wall Street, the institutions, what they do to control the market is very simple. They leave a large amount of unfilled orders at certain levels of buying or selling, and that they understand if price comes back to that level, they're going to do the same thing again. It's right. Just what goes up must come down, okay? That's where we come into play. We don't want to buy at tops. We want to buy low, right? Buy low, sell high. Easier said than done. All we're getting here, the better you can read a chart, the better chance you have of getting in and getting out, all right? Now, here's the other thing. What if you're wrong, Mr. Green? Of course, you're going to be wrong. That's where risk management comes into play. And anybody who knows how to trade correctly knows that they always keep their losses shorter and they let their winners ride. All right? So there's a risk management rule that we teach and we go over, and other people know of it too, that if you let your winners be at least 3 times your losses, you're at break even at being only right 25% of the time. If you're right 30, 35, 40% of the time, you're doing very well. What am I teaching you here? I'm telling you this. It's not about being right or wrong, and most people struggle with that because psychologically it's embedded in our heads as human beings that we got to be right. And I used to have a mentor that said, yo, Ant, you want to be right or you want to be rich? Took me a long time to get over the ego, okay? But it ain't about being right. It's about following your rules, being good at a process. You know, if you're someone who's obsessed with get-rich-quick stuff, I wouldn't get into trading and investing. Or I'd get over it. Because I'm speaking as a guy that, you know, look, if you told me I can make $1 million in an hour or $1 million in 5 years, I'm going to take the hour. But I just know life isn't cut that way. You know, good things happen to people that work hard and they catch breaks eventually because they keep their head in the game. You know, that's a quote paraphrase from Denzel Washington. And I love that. Yes, you want to work smart, but I hate when people say, work smart, not hard. No, do both. Work smart, work hard. Good things come. All right? Trading and investing is a skill set that changed my life, but I grinded and busted my you-know-what to learn how to do this. And it does start with proper coaching and teaching and chart analysis and risk management, and you got to earn your lumps as you go, all right? So I hope this helped, all right? Just the importance of being able to read to what reading a chart is. Now, a lot of you ask, how long is it going to take you to read a chart? Everybody's different. You know, I was reading charts within a month. That means I wasn't making money within a month. It took me about a year to become a profitable professional trader. What do I mean by profitable professional? I could earn a living off of it, right? And that was a year of working my other job, right? And that was a year of, you know, grinding it out and learning how to do this. All right? So a lot of you that are already tuned, what's up, Marco? Jorge, what's going on? Santo. A lot of you in here right now that are live with us are already part of Trade Phantoms. There's a lot of people that are on here for the first time and they're checking us out. If you're interested, we have an admissions process. You know, we want you to evaluate us, okay? So feel free to go check out our reviews or anything of that nature. We're very transparent and open, but we also want to evaluate you as well, right? We just don't want anybody, we just don't let anybody sign up for this because let's be frank, trading and investing is not for everybody, right? And we're not for everybody. So come check us out, TradePhantoms.com. Okay, we always start off with a complimentary class. Okay, you just go to TradePhantoms.com, you click on register here. And down here on register here is going to bring you over. I think the next one, I'm doing this on Wednesday. The next one is tomorrow. We do these fairly often, okay? But this is the next one that's available. Trade Phantoms, Mr. Green, that would be me. Register for free. You click on that right there. Email, name, phone, complimentary link. I'll send you a text personally from my own cell. This is what we'll go over. All right, what you'll learn. Okay, you're going to learn a lot. You're going to be with me for 75 to 90 minutes, all right? We're going to talk about all these concepts. So no matter where your learning level is or your skill set, all right, this information is very, very informative. How the markets really work. We kind of already started talking about that today. Buyers versus sellers, right? Supply and demand, right? Is it all about stocks? No, there's other ways to make money in the market. It's not all about stocks. There's other asset classes like options, like cryptos, like Forex. Forex is my baby. I'm the main Forex trader and instructor in Phantoms. Futures, right? ETS, all kinds of stuff. Talking about whether you're trading for income or wealth management. How to grow a smaller account, right, into a larger account. And obviously using proper risk management. And then obviously how a professional trades. But another thing that I forgot to mention is multi-directional trading strategy. In order to be consistent and have something going that you can earn a stream of revenue, you have to be able to give yourself an opportunity to know how to make money in all different directions, whether that's up, down, or sideways. So just because a market's going down and the news says bad market, no. There's no such thing as a bad market. There's no such thing as a good market. Yes, Vanessa, you stole my line. Can I have a good day and you have a bad day? Absolutely, right? But get out of the verbiage, get out of the media, get out of the news, all right? So yeah, feel free. We'd love to see you in here. Come on here anytime. And then obviously, I know some of you would ask, if this is something, if you continue to move forward with this, we offer membership plans at very, very, very low cost, monthly, quarterly, annually. Cancel at any time, all that type of stuff. We prorate the education, everything. So sometimes there's people on here already that have friends that are Phantoms. If that's something you want to do, fantastic. I recommend starting off with the complimentary class. It can't hurt you. If you move forward, you move forward. If you don't, you don't. You're still going to learn a lot. All right. So, hey, I appreciate everybody's time. I hope this helped for the people that asked me to do this. I am Mr. Green, and I am out of here. Peace.